So we decided to start providing you some analysis on Monday prior to the US Open. This I think will help everyone to um, have a quick feedback where we're standing ahead of the week. So prior the Monday Open of US. So I will actually go straight to the chase, okay? I don't want to spend time talking. So we'll go straight to the MT4. Hopefully you can see me, hear me. For any questions that you might have, any asset that you want me to look, anything, please don't hesitate to contact me and to write down on our question box, sorry, not question box, on the below the live in the Facebook or in YouTube, any questions that you have. Okay, I will just quickly, I need to open as well my YouTube channel, so I will have I can see your questions. Thank you for your nice comments, Linda. I can see your comments. So perfect. Okay, we are both live. We're live in every single channel. I'm happy for that. You know how difficult it is to use that multi-streaming is always challenging. So I'm glad that we have managed to do that. So okay, guys. As I said, below the video, either in the YouTube channel, either in the Facebook channel, you can ask anything you want. Okay, I will be here to reply to you. So as I was saying, I don't want to spend time on talking on what is really happening. I would like to go straight to the MT4 platform and start talking about what's going on in real terms, in the actual forex industry. So as usual, I will start with the majors, and first of all, anything that has to do with euro and dollar. So okay, here is euro dollar, and since I want to discuss about euro dollar, I must actually start with the latest data, economic data that we have seen um, in the economic calendar so far today. So as you already know, we had some data from Europe, Germany, and UK earlier today, and the most significant of all, if you ask me, is actually the German data. So German inflation, German manufacturing PMIs, because after all, Germany is the largest economy in the European Union, so it's actually well correlated with the average of the eurozone. So any result out of Germany is more significant than any other country, than France, Spain, Italy, and so on and so forth, because after all, it is the largest economy in the European Union. So we have seen, okay, so far the European stocks to bear some of their early gains. And since I started with stocks, I will slip to DAX and FTSE, okay? Just quickly before we go back to the euro dollar. Okay, here is DAX. Here we are. So we can see, let me double check that you can see me actually. So, okay, here is DAX. So you can see that after it jumped higher in the European Open, it quickly slipped lower. Actually, in the Asia session, that should be Asia session. Exactly. No, that was the European session indeed. So after it jumped higher in the European session, it bared some losses afterwards. Okay, so that has, but okay, that it's a small pullback. It remains sharply higher if you check that bottom that we have seen Friday and Thursday. So the European stocks well supported for the week at least, but they have bared some losses, and that is mainly due to the mixed data that we have seen earlier. So, first of all, we had manufacturing PMIs, okay, from a eurozone, okay. So the manufacturing PMIs has actually revised higher than expected. That's the final reading for February, okay, higher than expected. Something that helps a bit the overall economic background of eurozone. However, let's not forget that manufacturing PMIs are at the highest level in 37 months across Germany, France, and Italy. This is something that highlights that despite the ongoing lockdowns, restrictions, second wave of the pandemic and the virus restrictions, the manufacturing sector is looking very, very strong. Okay, so we have manufacturing sector and we have service sector. Manufacturing sector is giving lately a lot of positive signals, a lot of optimism, because it's giving the impression, it's actually not giving the impression solely, it's actually it are the real economic data that is improving. It has some kind of a rebound, benefiting from demand of goods and domestic and export markets, despite, as I said, the virus restrictions. Something that is very, very opposed to the service sector, which is largely here, as you already know. Travel, hospitalization, tourism in general. So, however, the data today were all about manufacturing PMIs and inflation. So we have seen that the readings came better than expected, something that boosted further the sentiment, the positive sentiment in the markets. That's why um, this is something that added to improve consumption. Okay, so we can say that these are good news for the eurozone, because this gives the hope of an overall economic activity ahead, especially in the second half of the year of 2020, but also this is why we have seen European stocks being well supported. Okay, but as I said, we had also inflation out, and that manufacturing PMI is also highlighted that inflation pressures are there, are actually building. Okay, that's why we have seen lately reflation trades. So reflation trades are not totally unfounded this week. Okay, so I mentioned about inflation. As I said, it was a bit mixed, especially the German one. Um, but on the whole, there may be a slight downside risk to the preliminary Germany numbers. Okay, so however, what we are getting from the PMIs this morning is that once again the cost pressures are building in the manufacturing sector, which together with the higher energy prices like oil, you have seen that is well supported, it's at 63, is something that could push up consumer prices once consumption demand is also rebounded. So just to have in mind, the German inflation numbers are likely to remain above the eurozone average, because as an article that I have already posted, we can see that the Germans actually could exit the technical recession in contrast with the eurozone and Europe in general, which things are quite worse. Okay, so keep an eye on inflation. That was in regards to the data. So as I said, the retail expanded manufacturing PMIs and the mixed inflation had actually kept the stocks well supported despite the pullback, the slight pullback. So this is the theme in the Eurozone. So European stocks well supported. Euro on the other side. Let's flip to the euro. Give me a second, guys. Euro dollar. By the way, before we shift to euro dollar, you should see that we have seen a bit of a range in the last hour. Ups 14,000, down 13,890, but remains above 20 period moving average. So a dip lower below the 20 period moving average could open the doors to the lows that we have seen the whole last week. I mean, for nearly 7 days, no, 5 days in a row, while a reversal higher, which looks more of a less a more likely scenario due to the rising momentum in the 1 hour chart, because the RSI is a bit flattened, but it holds about 50. Okay, stochastics turn lower due to that pullback, but it's not aggressively lower, so let's wait and see. But MACD is rising higher, so we might see another attempt to the upside, but as long as it doesn't cross that previous high, okay, then then it might remain neutral. It needs to cross that previous high, okay, which is for 13th, 1400, 40,000 key number, psychological number, a round number. This and only this could open the doors to February's high, and more precisely to the upper Bollinger at 14,097 for those that are interested in DAX. Now, let's flip to our major, the most significant currency pair of all, euro dollar, of course. Okay, so what we are seeing is a continuous decline sorry, with dollar sustaining in the near term at least some gains against euro. I think. Okay, Joyce is asking about euro. I just flip to euro, dear. Can see gold questions. I will go to that one in a minute. Give me some time. Let me check also YouTube. Hello everyone from Nigeria. Hello from Zimbabwe. Hello South Africa. Linda, hi. Namibia, nice. Pound Cat. Tanzania. Nice to see you guys. I'm glad that you're here with me. So as I was saying, euro dollar, okay? The most important currency pair of all after all. Okay, you can see clearly a big decline since Thursday. Okay, so something that triggered our attention last week, it was reflation trades. Remember, high yields weighed on the stocks and bonds. So this reflation trades, it was on the anticipation of a higher and increased inflation globally, something that supported dollar. But something that also explains this dip was also the month end. Okay, month end. Remember that always month end, week's end, quarter end provides some kind of a monthly end flows. People are closing positions, repositioning. So this is actually that's something that also sorry. So I'm replying to a question. So as I was saying, this is something that explained Thursdays and Fridays last week behavior, performance, if you prefer. Okay, so we have seen actually a bit of a bit of a shift on the reflation trades on Thursday and Friday, something that looks too weak to continue a bit so far today. So those months ends, as I'm saying, have seen on Thursday and Friday to support stocks and bonds and to shift the yields slightly lower, some kind of a technical buying, okay, after the yields have spiked higher. Okay, so however, in regards to the dollar right now, okay, in regards to the dollar, you should know that the theme so far, okay, has been a more of a rebound of dollar only for the near term. Okay, and why I'm highlighting this is because if you go to the dollar index, which is the dollar basket, the green pack as we call it, and where is my dollar index? Sorry. Okay, I will open it. Dollar index. Here it is. It bothers me. Okay, come on. Okay, it opened finally. So as we already know, the we have seen, so the theme of the day is a rebound of dollar. You can see that in this 1 hour chart, rebounded from Thursday's lows up, continue to the upwards, cross 91 just earlier, just the last in the European session. But after all, the overall picture of dollar, and I mean the medium term, the long term, remains to its nearly, not nearly, actually to its nine, it's actually, sorry, to its 18, 19, 22, to nearly 4 years lows. So dollar remains very, very weak. And this is not expected to change for the medium term, at least, because let's not forget that the US approved huge stimulus of 1.9 trillion. So huge spending, okay, um, is very well correlated with cheap value currency. So huge spending implies to cheapen currency. So that's why dollar remains under pressure in the overall picture. Now, if we focus solely on the near-term picture of where we are standing right now in this 1 hour chart, we can see that dollar has been appreciated, has been helped the last 2 days. So 3 days, Friday, Thursday, Friday, and so far today. Okay, and this is mainly due to the lift in treasury yields, some kind of backdrop of rebound in global stocks, markets, and equities. Also, the good news in regards to and some of the, how can I call it, a bit of a bit of a risk appetite recovery in the global markets, if you prefer. So the fact that bond yields retreated is something that helped in the near term the dollar. So that's why we have seen euro dollar spiking lower. Okay, let's check that. So euro back to euro dollar continues lower after that dip in the European Open, further to the downside, 120.23, sideways the last 4 hours in a row. But okay, what we are gaining over here is a nice descending triangle. So if you put a triangle over here, no, that's proper. Let me check. Okay. Sorry, I'm facing some hardware issues with my dearest mouse. Doesn't really comply. Okay, I will do it 1 second again, otherwise. Okay, perfect. Okay, we're having some kind of a regression downwards channel in this 1 hour chart. So if you draw something like that, guys, it will help you identify immediate resistance and support levels. So can you see that? Okay, can you see that is posting lower lows, lower highs? So anything, a move below my middle line could open the doors the to 5 hours lows in this fractal at 120 120.26, or a further depreciation could find support to the lower line of my descending triangle and the round 120 level. However, on the flip side, if the asset is well supported, any rebound could find resistance on this confluence of 20 period moving average and upper line of my regression channel, which is at 120.80. So only a break of 120.80, okay, 120.70 more precisely, okay, could open the doors to 121 level or even 121.40. Okay, so regression channel helps over here. Also, Fibonacci will help you significantly because you will realize whether it has crossed some Fibonacci levels and whether it's going into the 50% retracement and the 120, 140 level. So, since you asked me, my dear, it was a Facebook question, my dear Joyce. So, for the time being, 1 hour chart, the asset is a bit neutral but heavily weighted. Can you see how? No, you can't because I'm hiding it. So 1 hour chart, neutral for now, but neutral to negative. Why? Because you can see that the MACD is aggressively lower with the signal line, with the histogram lower than signal line. Something suggests that there are a lot of bears. Bears in the market. So RSI is also very close to the 30 barrier, so well below its 50. So overall, in the 1 hour chart, we have neutral to negative situation. Okay, now in the overall picture, just for you to know, overall is a bit neutral because it has been in a bit in a range, bouncing for the whole January, February between 120 to 122 territory, but this big sell-off that crossed below 20 day moving average on Friday, and the fact that so far today is pushing again lower, brings to our attention the low level of this body of this range at 120 or even 129.60 territory. Okay, so yeah, that was on euro. Let's keep moving. You said gold. Someone asked about gold. No, many people ask about gold. Let's flip to gold. um, gold. Guys, something that I forgot to tell you, by the way, in regards to the dollar. Okay, so I told you that euro dollar looks a bit neutral in the overall picture, medium term. While it has been 2 days lows, but you should really turn your attention to what the aftermaths of the stimulus will be. So I mentioned that the House of Representatives has passed the Democrats' 1.9 trillion stimulus package, okay, over the weekend, something that was really much expected. However, the stage is set for a handoff from monetary stimulus to a more of a fiscal stimulus. Okay, so this is likely to the source of ongoing um, uh, indication due to the bond markets. So even though we have seen and we'll keep seeing stronger than expected corporate earnings, and this should really carry stocks higher, okay, um, for any kind of stocks, for tech stocks, for any kind of stocks, okay. Um, let's not forget that the stimulus, okay, and the expectation of a really hot economy. What we mean by hot economy is when the inflation is really high. So on the expectation of a really hot economy, of inflation, rising inflation, that this is something that could brings back the dollar weakness, even though we haven't seen that the last few days. Okay, so don't have the fundamentals on the back of your mind. Have a look on Powell's speech on Thursday. It will be key to see what he has to say. But yeah, keep in mind the aftermaths of the stimulus. As I said, fundamentally, huge spending weighs on countries' currency. So now, you ask about gold. Sorry. So, hello guys. Hello. I'm glad that I'm seeing you from all over the world. Hello everyone. Hello Linda. Hello Luis. Tanzania, Kenya. Hello, everyone. So, I have seen your question in regards to pound cat. Let me excuse me for a second. I will flip to gold because we have a lot of questions, a lot of things, a lot of people asking about gold. And what can we expect dollar doing this week? Okay. So you mentioned weekly chart. Okay. In regards to the whole week, if you're interested in the week, in the weekly picture, it remains neutral. So we could see day after day for the whole week a bit of ups and downs. So let's flip to dollar to euro dollar daily. Can you see? As I mentioned, it's going up and down. So what I can tell you, my dear Alexander, is we had a pullback, it crossed below 20 and is moving further to the downside. So over here, we could see, actually I will put also the 5 and 9 exponential moving average over that. So we could see that is moving southwards, even though the momentum is a bit neutral. But if I put also the stochastics, you can see that RSI, first of all, RSI is below 50, so it's negative. And stochastic are sharply lower, something that suggests that there is some further space to the downside. So there is further space to the downside. However, since you asked for the week, if it moves further to the downside, but it managed to sustain a move above 1960 or even rebound, then we might see this week hitting down to 1960 and then rebounding. So what is expected for the week is some ups and downs, but within this range. So keep an eye every morning to see how it closes the previous day. Okay, but Intraday it's negative. You can clearly see that. So as long as it doesn't exit the 20-hour moving average, or it doesn't recover at least more than 30% of the decline that we have seen in Thursday, the asset expected to continue moving lower. Now, for gold. Gold, okay. Let me hide this. Okay. Gold has been actually due to the weekend news in regards to the stimulus, has seen some kind of appreciation in the morning. Can you see in the Asia session? Okay, that it has appreciated, but this didn't last for long. You can see that it peaked today at 1759 level and quickly turned lower. So 1 hour chart, guys, okay? Well below 1800s, key psychological level. Retrace quickly from the top of the day at 1760 and is moving further to the downside. And can you see these tails? The bodies of the candles are not so strong, but we had a continuous 1, 2, 3, 4, 5 hours to the downside come on, in this 1 hour chart with RSI at 39, a bit flattened but below 450, and MACD negative but not aggressively. I mean, flatten as well. So what that give us? This give us the impression, the signal that um, for now, we have very weak candles, something that implies to consolidation. Okay, so we have seen a pullback, but a weak one. So we cannot really tell whether it will continue to the downside in this 1 hour chart. But what is certain is the fact that the overall picture or even the 4 hour picture are negative. Can you see how aggressively lower, well below zero is the MACD in the 4 hour chart? The RSI as well slipped lower again after that correction. Further space to be covered to the downside. Also, we have seen the 50 period moving average crossing below 20 moving average, the 20 moving average crossing below 50 period moving average in this 4 hour chart on Friday, something that indicates that, you know what, is again weighted. Despite this pullback, is again very heavily weighted, and this is the case since the beginning of the year. We have seen some ups, some rebounds, but they have been limited by with the asset posting lower highs. So this pullback, this drift that we have seen, this is the daily chart, guys, by the way, but focus on that, okay? So we have seen last week a more of appreciation, but it failed to cross the 20-day moving average. And actually on Thursday and Friday, it has nearly some full body bearish candles. So the length of those two candles need to be in focus. Why? Because despite the appreciation that we have seen today, today's performance is a bit not uneventful. It could be ignored for now. Why? Because we don't have, we cannot really see, first of all, a regain of significant losses of last week. It remains at the low territory of the past 3 months and more. and also it's not even close to the mid level of this candle. So the gold remains heavily weighted. Big selling pressure from MACD, big selling pressure for RSI, big daily candles. So far, performance is at the low territory of Friday's closure. So that correction, due to the passage of stimulus, looks to be limited, at least from the technical perspective, as long as it doesn't rebound and to cross the, come on, let me put my Fibonacci on, as long as it doesn't get back to above 3750 territory. Okay, at least that 55, let's make it down 1755, which is the 38.2 Fibonacci retracement from the pullback that we have seen last week, and also coincides with my latest fractal over here, down fractal, seen on 2 weeks ago, if I'm not mistaken, but also back in November support. Okay, so key. Actually, support that has been um, it has turned a bit as a resistance. The support that it was well established since June 2020. As long as we don't see a decisive closure at the end of the day, at the end of the week, above that level, at the end of the day, actually, at the end of the week, it needs to at least get back to um to 1800s, which is, we have a long way until that. But yeah, keep an eye on the Fibonacci. So a lot of negative bias for gold, sustained getting under pressure. So any rebound looks to be just a correction of this long-term downtrend. Okay. Okay, guys. Oh, you can see that the momentum is strengthening to the downside. So RSI slipping again lower in the 1 hour chart. The asset crossed the 20-hour moving average. Let me have my intraday set up. And nice. 5 and 9 hours moving average have bearishly crossed. So we might see another attempt to the downside with near-term support at the lower Bollinger Bar pattern, 1726.25 more precisely. That was on gold. So someone asked about pound cat. Pound cat. Nice to meet you, Marumo. Nice to meet you. Okay, so pound cat and dollar cat. Okay, pound cat for MHB and dollar cat for Shineru company. Okay, good. You should know that Canadian dollar, in general, the commodity currency, should really turn your attention. They have some very interesting crosses, especially the Canadian dollar against every single asset. Yen, Swiss, dollar, pound. So you ask about pound cat firstly. Should be somewhere here. Yeah, here it is. So I will start with the daily chart, quickly saying that it's in an uptrend since December 2020. Let me just to stick your questions so people could follow us in my MHB. So yeah, pound cat to the upside. Pound has been one of the biggest gainers for the whole 2021. Let's not forget that. Let's not forget, guys, the fundamentals behind pound. Okay, so Brexit is out of the way. The data are doing quite well in UK. For example, we have seen UK February manufacturing PMIs earlier higher than expected, actually to 2 months high. Some optimism in regards to the expansion or rebound or recovery, if you prefer, of the UK economy. Also, a lot of optimism in regards to the vaccination after Israel and after, what was the second country? I don't remember. Israel and I don't remember, but I think UK is the third country that has managed to vaccinate a big portion of its population. Okay, so that helps the pound. Also, as I said, Brexit uncertainty is out of the way. Okay, we know that the aftermaths of Brexit, the results from Brexit, are not good for the economy, for the UK economy, because in the market it's all about sentiment. Okay, so with vaccination doing great, with UK announcing that they have started some steps towards a complete open out exit of the restrictions, of the lockdown restrictions, the fact that economic data are good, the fact that employment sector rose for a second month in a row. What else? Yeah, it was the restrictions that UK will be restrictions free by June. Is the vaccination, is the fact that Brexit is out of the way. So all this, I don't know, I don't quite remember if I missed something. Okay, but all these are actually helping the pound significantly. That's why we have seen that pound has been in a rally since December. So is that boosting the UK economy outlook reflecting by outperformance of pound? So actually, pound, I haven't put that on, but if I'm not mistaken, where is it? Let me quickly see before I go back to pound CAD. But if I'm not mistaken, it's at 3 years highs. Yeah, it is. It's at 3 years high territory against dollar. Can you see this is the monthly chart? So it went back to nearly 140 after it retested it significantly last week, and it remains very close to 3 months high against dollar. So and that's actually coincides with a lot of positive momentum from technical perspective, from MACD, from RSI, from parabolic chart if you prefer, from moving averages. So there is further steam to the upside for KIP. But let me, sorry, I'm bumbling a lot. Let me flip back to pound CAD that HB asked for. So long-term appreciation remains, it has some ups and downs the last few days, but remains well supported by the 20-day moving average. Can you see that? Well supported by 20-day moving average, and MACD remains well above zero. Bullishly cross, holding gains, holding positive bias, RSI above 50, some ups and downs, but it sustains a nice slope above 50. So the overall daily, or even if you prefer weekly chart for pound CAD remains positive. Okay, and so what could start worrying us is if it falls below if it had a pullback and falls below that 175 territory. See, this 175 territory suggests more than 30% retracement, but also it was a key resistance area that has now turned into support area. So it was a key support area since September, October, November, December, January, February, six months in a row. So this key resistance has actually now turned into support. So as long as we've seen the asset not crossing below 175, then the overall picture for pound CAD remains positive. Okay, now I will flip to the 1 hour chart, intraday picture. I assume MHB is interested mostly on 1 hour chart intraday picture. So we had a bounce, quickly turned lower. Let me put my so quickly turned lower today, actually extending below the 200-hour moving average, but despite this sell-off, okay, we need to wait at the top of the hour for this candle to close, but it looks that it has stalled a bit. Can you see MACD is 0 with signal line well above 0. RSI came down to very close to 30, but is trying to recover again. Stochastic, the 1 hour stochastic, I'm talking only about intraday, guys, okay? 1 hour stochastic turned below oversold. It was in the oversold territory, but is turning higher again. So this dip looks to have stalled, okay? We need to wait a bit to see how this candle will close. But what I can see right now is a bit of a stalled, a bit of a sideways movement, a bit, yeah. This is a 30-minute chart. You can see that the fast MAs are pointing on the right hand side, so that's suggesting consolidation. Yeah, so this dip might be a correction of this long-term appreciation. So yeah, hopefully I replied to your question, my dear MHB. Let me flip to Chinedu company. Yep, with dollar cat. Dollar cat. Savio, you said you have a question, but I cannot really see your question. Please type it down and I will see it. So, dollar cat. Okay, dollar cat. Here we are. Okay, guys, this is the 1 hour chart. First of all, you should really know that before you trying to understand what's going on with dollar cat, you should always checking oil. Okay, so that's why I will start with oil. Here we are. Long-term appreciation. Okay. Retested 63.80 level last week. Dipped on Friday afternoon, but again rebounded this morning in the Asia session to 62.80. Didn't manage to cross above it. It recovered all the gains that we have seen, and it dipped again to 61.70. But can you see this 200 moving average? It retested it on Monday, Tuesday, Wednesday, Thursday, Friday last week, but never crossed below the 200 moving average. So, as long as we don't see a break of that level today, then we might see another rebound because it's a key near-term support. But I will put the 4 hour chart as well, because this level, you should know that it coincides also with the 50 period moving average in the 4 hour chart, but also a better support area is really that latest fractal that we have in 6130. Why is that? Because it was last week's support, Friday's low, so this is a better support area. But you can see it has formed in the daily chart some kind of an evening start formation, okay, because we have bullish, doji, bearish, but we don't have the confirmation. So as long as we don't see continuous dip the next few days, then this pullback, this decline looks to be just a correction on this well supported oil with higher highs and higher lows and higher momentum since November. Can you see how aggressively higher is MACD, how the positive bias increases? So this is expected to remain the case. Of course, ahead of OPEC. OPEC is on Friday. No, Thursday. Sorry. So OPEC is on Friday. So ahead of the OPEC, we might see some pressure, but some near-term pressure. Okay, the oil has indeed shifted lower today. Okay, has indeed shifted lower today. It's under pressure. It's a bit of everything, a bit of dollar temporal near-term strength. Is the fact that people are focusing on the OPEC on Thursday, and they really remain a bit cautious ahead of the OPEC. This is something that might explain this pullback, but the overall picture, technical and fundamental, for oil remains positive because we have seen a lot of production cuts from OPEC supporting the oil. We have seen, we are also expecting Saudi to proceed with another output to actually to increase output by 5,000 barrels in April, but to self-impose 1 million barrel cut February, March. Okay, something that supports the oil as well. Also, the US production is back after that weather conditions in Texas and in the Gulf Coast. So the fact that we have that the expectation that Saudi is likely to self-impose 1 million barrels cuts. Okay, it has actually already imposed 1 million barrels cuts for February and March. And on the other side, the US production is back. These are factors that, from one side, the production, the fact that, I confused you maybe. So the fact that the US production is back is something that weights, that pressures to the downside oil. But in the near term, it's a factor that explains why we have seen oil price a bit behind today on Monday morning. But the overall picture remains positive because of the OPEC plus expectations to try and sustain the output, to balance the output and protect the output and the protection and demand and supply, nevertheless. Also, something that is also supporting oil is the fact that China is consuming a lot of oil, so more oil than before the pandemic, while the demand in the rest of the Asia has also rebounded. So this is something that supports the overall picture for oil, because it simply suggests demand growth. Okay, so in simple terms, demand is growing. OPEC doesn't expect to do any major changes. Protection is back, demand is growing, so overall picture remains well supported. Near-term picture, because the US production is back, is under pressure, but near term only, this Monday morning, okay? As long as we don't see, let's see the technicals, um, as long as we don't see the oil dipping lower than, let's flip to the daily chart. Okay. It doesn't dip. Okay, for those that are interested in the long-term picture, as long as it doesn't get back to the 55 territory or even the 52, which is the 60% Fibonacci level, then the overall long-term picture doesn't change into a negative one. Now, for those that are interested in the near-term picture, okay, as long as we don't see the asset, I will put the 4-hour chart, I think it's better. As long as we don't see the asset moving below $61, then this dip might be just a correction before another attempt to the upside, because momentum remains positive. Okay, guys? So can you see? No, you can't. This is the oil value, by the way, not dollar CAD. Excuse me. So can you see? There have been a lot of ups and downs, but the MACD has stayed positive for the whole February, despite these ups and downs, because after all, it was posting higher lows and not lower lows. Okay, so dip before another attempt to the outside. So we need to keep an eye on the 61 territory somewhere here. Okay, so that was on oil. Remains to the upside. Near-term picture is negative. Next support at 61.30, and the very next one at 61 level. Yeah. What else about? Okay, let's flip to dollar CAD. Dollar CAD. Dollar CAD dipped. So Canadian dollar is benefiting against dollar due to the oil appreciation. Okay. Very well correlated assets after all. Okay, so dollar CAD dipped down to 126.70 territory. So that's around 80 pips lower than Friday. As I said, it's due to the 2% rally in oil prices. On the anticipation of even higher oil prices, there are a lot of analysts suggesting that the crude might hit to $100 per barrel, because the supply gap oil super cycle remains strong in the market narrative. The oil is underpinned also by demand stimulation, causing by this massive stimulus in the United States and in the Europe. So, and the fact that due to the vaccine, we're really hoping that soonish. Oh, you cannot see my screen. Sorry. Give me a second to fix the problem. What happened? Come on. Oh gosh. So if Facebook is working, in YouTube something is wrong, or is it just me? Okay, let me know if there is any problem. So yeah, dollar CAD, as I was saying, I forgot what I was saying. So Yeah, after all, we are expecting that we're getting back to normality again because of the vaccination. People are vaccinated day after day, so eventually we're expecting that people in the globe, we're getting back to where we was, to the normality, economic normality, but social normality as well. So these imply to lifting of restrictions for traveling, lifting on the restrictions to hospitalization. All this suggests a rise in demand of oil. Okay, so rising U.S. supply, potential potential for a weakening in the discipline that OPEC Plus is maintaining. So this, in simple terms, suggests oil higher. More demand, more supply, oil higher. Simple as that. Um, so yeah, that's why there are many people seeing that oil might hit to $100 sooner or later. So dollar CAD over here, it's slightly lower, 126.70 territory, held by oil. Next support stands uh, to 200 to 50 period moving average in this 1 hour chart, which is the 126.40, also coincides with two fractals over here. If I put my Fibonacci as well, you can see that it's very close to the 38.2 Fibonacci level. So if this is broken, then eyes could turn to the 126.10 or even 125.70 territory. Okay, momentum is turning lower, RSI is turning lower, but it's very close to the 50% to 50 level. So yeah, near-term picture and medium-term picture remains negative, remains to the downside. So this appreciation on Thursday and Friday lacked of further boost. So it retested 50 moving average, day moving average. It crossed above 20-day moving average. It retested 50-day moving average, but it quickly turned lower again, crossing again today the 20-day moving average. So this rebound is turning again to the downside with this long term decline since March 2020. So my dear, where is it? Who asked for it? My dear Chineto company. So near term, dollar CAD under pressure, long term, dollar CAD under pressure. What happened to pound dollar last week is what we said. We have already covered it. Hopefully you were here. Brexit uncertainty out of the way. Fast vaccination in UK. Announcement that the UK will be restriction free by June. Good economic data. Weak dollar overall. Held pound shifting higher. Thank you for your nice comments, Kumar. It is visible now. I guess I'm not sure for which asset you are referring to, Dada Prashad, but hopefully, yes, I will go ahead. Okay, I will keep going. Okay, let me check questions from Facebook as well. So. The Kiwi Swiss yen. Fejiro, nice cross Swiss yen. So I will start with Kiwi because Australian dollar, okay, this is a daily chart, dipped Thursday, Friday. We said dollar strength, but the same stands for Kiwi. You ask about Kiwi, so where is my Kiwi? Kiwi. Okay, kiwi, similar reversal like dollar cat, like Aussie cat. So dipped. This is a daily chart, crossed below and closed below 20-day moving average on Friday, but it has crossed above 20-day moving average so far today. And the key, what's key support level is the 50-day moving average. So this blue line, guys, okay, this blue line that I have is my 50-day moving average, simple moving average. It has well supported the asset since November. So as long as we don't see a cross below it for the week, and even a better support level is the 50 exponential moving average. Have you seen how well it supports the dollar, the asset? So as long we don't see a break of the 0.7180 level, so 7180, why is that? This level is the confluence of the 50 exponential moving average, 50-day exponential moving average, and my trend line when I try to connect the lows since December. Key support area. Okay, key support area. As if we see a cross below that level, then doors will be open for 0.6987 or around 0.70 territory. But as long as we don't see a break of that level, okay, then overall picture remains positive. This is the daily chart. Can you see how strong the MACD is? Okay, my stochastic have flipped lower, but this stochastic, because it's 533 the settings, I only use them for the 1 hour chart. Okay, so this is a 1 hour chart. Kiwi dipped, entered a sideways movement since Friday, bouncing between 0.72 to 0.7290, bouncing. So it had rebounded the last 2 hours, crossed below 20 period moving average, but remains negative for the time being 1 hour chart. So overall picture negative, overall picture daily chart positive, and it pulled back as long as it's not below 0.72, suggest a correction of this long-term rally. Intraday now, it has entered a neutral zone ranking market, so any um, any small rebound at 0.72 territory could retest 0.7290. Any retest and failure to break that level could turn again the asset lower to 0.7220. For now, you can see that MACD is negative. Stochastic have appreciated. Okay, so there is further steam to the upside, but as long as it doesn't exit 0.7250. If I put my intraday setup, so can you see fast MAs are flattened, MACD is negative, RSI the same, so nothing really to say. This rebound might be another how can I say that? Another sign that another correction before another attempt to the downside. That was on dollar cat, on Kiwi dollar. Sorry. You ask about Swiss yen, one of the the biggest losers of the day. So you can clearly see a very sharp sell-off. So what can I tell you, my dear Fejiro? Big sell-off. Fast moving average are lying lower. MACD is negative. RSI is close to 30 and it doesn't look ready to turn higher. Stochastic, again, to the oversold territory. Bollingers are expanding lower and the asset is outside the Bollinger, something that suggests oversold asset, but without really hint for a correction upwards, for a rebound. So negative picture for the 1 hour Swiss yen. Definitely negative picture. You can see MACD is increasingly lower. RSI below 50 and remains without indication of a rebound. It's still pointing to the side or to the downside. Stochastic the same. So what we can tell is that it has crossed, it has retested 11660 territory. So the next support level, let me just, is the Bollingers in the at 11650. And if that breaks, the next support of the day stands at this bottom that has been seen last week and the 11620 territory. These are the next key support levels. And actually, can you see how full body without any tails this 4 hour candle is? This suggests that bears are in control of the asset. Fast moving average channel line lower. Yeah, a lot of sell-off for Swiss yen in the intraday picture. Now, in the overall picture, daily chart, again similar picture, but yeah, rejected 20-day moving average is pushing lower, so support is at 116. But this 116 is very key. It's very important because it's a support that has been seen the last 3 months, December, January, February. So a cross of this, a decisive breakout of this level could open the doors to 113 or even 114 level. So keep an eye on that on your daily chart. So daily chart, neutral to negative, intraday chart, negative. That was on Swiss yen. Yeah, any questions, guys? I can see that I'm running out of steam, maybe tired, but okay, dollar yen, very good, very good. Dollar yen, okay. Now is the time to ask me more questions because after dollar yen, I will call it a date, okay? Thank you too. Fundamentals always matters. You need to know first the fundamentals and then to check the technicals, okay? First the fundamentals for the overall trends. It is okay, data pressure. Okay, I got it. Okay, so Slindley, dollar yen. Sorry, I missed dollar yen. One of the most significant. They crossed 116. So okay, dollar yen. Okay, a bit of a messy chart, but I think you can clearly see this upwards movement, upwards channel that we have seen since December, the end of the year, the beginning of 2021. So any retest of my upper trend line is a retracement alert. Any retest of the lower trend line is a rebound is a rebound alert, okay? And this continues to be the case, to be honest, okay? So can you see it rebounded last week and it keep extending further to the upside without running out of steam. So this is the daily chart for dollar yen and the positive momentum. The bulls are having the control still, even though it's outside Bollingers. The bulls are in control, okay? So we might see some correction, but momentum is still strong. So we can see that there is some kind of a bullish cross of signal line and MACD over here. As long as we don't see the signal, the histogram falling below signal line, like we saw here or like we saw here, then for now is not the moment for a correction. But keep an eye how we will close tonight, okay? Okay, because it's overbought, so we need a correction. For now, well supported, 2 months rally, strong momentum to the upside. So key resistance level at 107.20, which is the 50% retracement level since the decline that we have seen in 2020. So it has managed to reverse the last 2 months more than 40% of the retracement of the losses that we have seen the past year. So key resistance 107.20. Overall picture positive. Intraday now. By the way, the ATR, let's see what the ATR is saying. ATR is suggesting a move of around 50 pips, 56 pips, okay? So let's flip to, so overall picture, daily picture positive. A bit overbought, we might see some correction, but for the medium term, is still positive. Intraday picture, by the way, in the daily chart, keep an eye how we will close tonight. Because it's Powell on Thursday, it's OPEC on Thursday, tomorrow is RBA, which I don't think it will affect significantly the yen. But yeah, keep an eye on how it will close today. So intraday picture now is a bit stalled. So it boosted higher to 106.75 earlier. Is slightly lower for the moment, but is having a nice upwards movement above the 50 period moving average. Let me put my intraday setup. Intraday setup, 5 and 9 exponential moving average have just clashed. So interesting. We need to wait for this candle to close to see whether we're going to have a bearish cross of the 5 below the 9 exponential moving average in this 1 hour chart. This could, if something like that confirmed, then we could see a retest of the previous fractal at the 106.46. Okay? 10 pips lower, like ATR is suggesting. But we need to wait because this is not confirmed. Intraday picture still positive. A small pullback for those that are really trading the 30 minutes chart. According to ATR, 7 to 10 pips movement. Yeah, but overall it's still positive, and yeah, let's wait and see. That's it. Any further questions, guys? Singdile, since you asked about dollar yen, have in mind, you asked about this week. You said it's not really down, it's just 2 hours to the downside, just 2 hours on this long 2 months channel. So if this bearish cross is confirmed at the top of the hour, along with the break of the 20 period moving average, the next support is at 106.46, or if you prefer, this 200 moving average, 50 period moving average, at 106.40, which has supported the asset the past week. So as long as we don't see a break of 106.40, this pullback is just a pullback. It's just a correction of this long-term appreciation. So hopefully I replied to your questions. This is a final call for questions. If you don't have anything else in mind, I will need to call it a day. Someone asked about S&P, for sure. Yes, let me check it right now. S&P. sorry, I missed it. Here it is. Stocks, despite the decline that we have seen last week, they remain like S&P. It remains within the upper Bollinger area, above the lows of last week's lows, so above the 3700s. So what can I tell? Momentum is clear over here. Can you see how big the MACD, the bullish MACD is? Can you see how far away from zero is? So overall, the stocks, despite the yields push, the stocks remains in the overall picture, in the long-term picture, well supported. Okay. What is So sorry, that was the weekly chart. So for those that are long-term traders, you can see that momentum is really strong despite what we have seen the last two weeks due to the reflation trades and due to the rebound of yields. But now for the daily chart, still we had 2 weeks decline, but can you see how well supported it is from the 50 day moving average, or if you prefer, let me double check something. Okay, how well supported is from the 50 period moving up, 50-day moving average, either exponential one or daily one. So the picture doesn't really change. It remains in an upward trajectory with higher lows. So yeah, we have a decisive slip on the momentum. But if I just put my Fibonacci on this, is still close to the 23% Fibonacci level, which is not a key retracement level, it's not a significant level to be seen, and is above it. So long-term, medium-term, daily, weekly term for stocks remain positive. So this considered to be a pullback for now, as long as we don't see a turn below 23%. Okay, if we see it turn below 23%, then next support is at 3680, 3580. This is for the daily chart. Intraday chart dipped, recovered, 3870 for the time being. MACD is crossing higher, RSI is crossing higher. Let me put my intraday setup as well. Fast MAs are moving a lie after they cross this 41 hours resistance area. After breaking this 40 hours resistance area with a nice boost on the US Open. So yeah, shifting slowly to the positive side intraday. And I think it even reversed more than 50% of the dips that we have seen the last week. Yeah, I did. So yeah, keep an eye on that, because next resistance stands at 3880 or even 39 territory. Let's see. Yep. So yeah, 3880, 61.8 Fibonacci level, and 39 round number. Actually, we'll put the 39 over here, because we had some strong 4-hour candles breaking the meat over here. So yeah, keep an eye on that. Might be time for a reversal. Who knows? Because we had down, doji, boost. So keep an eye at the closure as well. We might see a morning star, but not confirmed yet. Okay, that was it, guys. I'm running out of steam, unfortunately. I'm more than an hour and a half live. I have discussed about pound, my dear Michael, already. So pound remains well supported by its fundamentals. You ask about the Ethereum as well, right? Ethereum as well. So pound, let's start with pound. As I already talked to everyone, pound remains well supported. Overall outlook remains well supported. Remains above 20-day moving average, above all moving average in the daily chart. So um, bullish bias remains the case as long as it doesn't cross the 20-day moving average. Intraday has been in a decline today after rejecting the 140, but as long as it doesn't break the 138.86, then the asset remains neutral in the 1 hour chart, but overall very well established. If it crosses 20-day moving average, next support is down to 37.60, or even the 50-day moving average at 37.13. Now, in regards to Ethereum, Ethereum euro. Where is my Ethereum dollar? Ethereum dollar. Okay, great. So perfect. So similar picture with Bitcoin. Top to 1960 territory, dipped the last week. Right now is recovering, holding support at 1480 territory. Okay, daily weekly momentum holds steady, positive, but daily is like slowly down. But we have a key fractal over here, a key support over here at 1380, and an even better one is that 50%, a 50-day moving average. So as long as you don't see a break of 1300s, then this is a pullback. If you see, however, a cross of this area, the area that just dropped, then the asset, we could say that the asset is turning lower with next support at 892, or even this gapped down 780. So keep an eye on this support area over here. As long as it doesn't confirm a breakout of this area, the overall picture remains positive. Intraday now, 1 hour chart, ups, downs, up, a bit limited, struggling to break the intraday 1530 territory, stalled. It's a bit stalled, so that might turn negative, but for the time being we cannot really tell because momentum indicators are a bit mixed. Let me put my intraday setup 5 and 9. So yeah, consolidation for the moment in the 1 hour chart. I don't have a really clear indication. It's stalled, okay, at 1540. RSI are pointing on the right hand side, suggesting consolidation. RSI is flat and again suggesting consolidation. MACD is very, very close to zero, again suggesting consolidation. So the 1 hour chart is in a consolidation as long as we don't have a clear breakout of 1540 or a clear downwards move below 1500s. That was it, guys. I need to call it a date. Hope you enjoy our live. um, I have already discussed about the euro, dollar, and pound, my dear Chinentu. Anyway, this video is recorded, so once I close it, you can go back. Euro, dollar were the very, very first two that I covered, so you will be able to see. But have in mind that pound overall well supported, intraday under pressure, but support, as I said, on 138.86. Euro dollar under pressure, overall picture neutral. Next support area 1960, 190.60. Intraday picture under a lot of pressure, failing to break the 20 period moving average, suggesting that there is further steam to the downside for euro dollar. So guys, I need to call it a date. Thank you very much for attending my live analysis. Hopefully it was helpful. If not, I really appreciate it I appreciate your feedback. Come back, tell us what you want to see, and we will try to adjust your suggestions to our videos. Okay. Thank you very much for attending. Hope you're having a great day ahead. Keep an eye on RBA tomorrow morning, and the focus is really much on uh, Mr. Powell on Thursday with OPEC Plus on Thursday, and nevertheless, it's an NFP week. So all these that we are seeing for dollar, it might be on anticipation. All this strength that we are seeing this week on dollar might be on the anticipation of Mr. Powell and on NFP data. The markets might already pricing in a successful reading on Friday. So keep that in mind. Thank you very much for attending. Hope you're having a great day ahead, and see you again on Thursday, tomorrow actually, with an Instagram live, and on Thursday and on Friday, Stuart will cover the NFP results. So keep an eye on that. Thank you for attending. Hope you have a great day ahead, and see you again tomorrow. Bye bye.